Welcome back to Trading with CJ. Now I've got another one of my monthly ex-dividend videos for you today, and in this one we're going to be looking at companies going ex-dividend very soon in the month of October. And as always, it's a mixture of the UK's Ftse100 and the US's S&P500. Now there are of course a lot more going ex-dividend, but I'm just covering some of the more popular ones today to make you aware of those upcoming dates. You may already own some of these, or maybe you was buying some more anyway, so it's definitely worth knowing. And as you know, I'm not a financial advisor, and the stocks in this video are not necessarily recommendations. So if you are planning on investing into the stock market, you should always do your own research first. And as always, if you can hit the like and subscribe to my channel if you haven't already done so, that would be greatly appreciated. So without further ado, let's get into it.
So getting straight into it here, the first company up is ticker symbol JPM, that's JP Morgan & Chase. I think most of us have heard of JP Morgan & Chase. It is one of the big financial companies. It's massive in America, and its dividend yield is currently 3.89%. They're going ex-dividend on the 5th of October and will be paying out on the 31st of October. So it's paying out the same month, just a few weeks later. We can see the current share price is $95 per share, and they've been hit hard this year, just like most of the banks out there, most of the big financial companies. It's down about 19% on where it was 52 weeks ago. But if we look at their maximum graph here, it was growing and growing very nicely, then obviously the big crash and then a drop off. At its current price, according to analysts, it is still overvalued by 18.6%, so 18% overvalued. If we look at the PE ratio here, it's 8.59, so that's a very low PE. It is slightly higher than the rest of the industry at the moment though, but they are predicted to have future growth of 25.5% in the next 1 to 3 years. And if we go down here, we look at its debt to assets, it's 90.28% debt to assets there, which, you know, hasn't increased massively from the previous years, and it's not the worst debt to assets we've seen there. Something that is quite interesting about JPM is in the last year, over $10 million of shares have been purchased by insiders on this company. That's over 10 million in the last year, which is pretty good going. Now this dividend yield here of 3.89%, they are considered one of the biggest dividend payers out there. Very stable. They have been growing and increasing that dividend over the past 10 years plus, and the payout ratio is only 48%. So it's a low payout ratio and increasing dividends year after year. The second company up on this list is Spirax-Sarco Engineering, EPIC code SPX. So Spirax-Sarco Engineering, it's in the Ftse100, its EPIC code is SPX. It has quite a small dividend yield of 1%, 1.02%, but it is one of the biggest companies there in the Ftse100, and it's currently trading at £112 per share. It's going ex-dividend on the 8th of October, paying out on the 6th of November. It's going to be paying out roughly 33 pence per share, or 33.5 pence per share. If we look at the 1 year graph here, it has been very impressive. Obviously the drop off in March, but then the growth has just continued up and up. This is a big engineering company based in the UK. You can see here it has different segments all across though, Europe, Middle East, Asia, Africa, etc, etc. It's one of the big engineering companies, and the growth has been really good. But look at this, the maximum chart here, this takes me back to 2013, just consistent growth. However, at its current price, it is considered overvalued by 198% according to analysts, so massively overvalued, and the PE ratio is 43.33, which is very high for the rest of the industry. But it does have a 7% future growth in the next 1 to 3 years, that's of earnings, and 21.8% future return on equity in the next 1 to 3 years. Looking at its profit here, it is still making a profit. It's 13.41% profit, which is pretty good. And the debt's not bad either. It's 55.54% as well. This is a big engineering company, deals with heating, temperature management, etc. And the growth has just been really good for this one. So like I say, not the highest dividend yield. However, nevertheless, it is quite an expensive stock. So you're going to be getting 33 pence per share. The next company up on this list is from the S&P 500, and that is Verizon. So Verizon, ticker symbol VZ, it is in the S&P500 and it has a very nice dividend yield of 4.26%. It's going ex-dividend on the 8th of October, paying out on the 2nd of November. It's going to be paying out roughly 63 cents per share. We look at its 1 year graph here. It's not really moved a lot. We're still slightly down from where it was a year ago, but it has recovered somewhat since the crash. Currently now about $59 per share. And at this price, it is considered undervalued by 42.8%. So a massive discounted price here. We've got on the maximum graph. It's a bit choppy. It's up and down. However, nevertheless, it is still growing. And it's not far off of those all-time highs where it peaked up around about $64 per share there. The PE as well is currently 10.67, which is lower than the market, but it is kind of in line with the rest of the industry. Verizon is an entertainment and communication company. Most people probably heard of this one. It's a big dividend payer, one of the solid dividend payers there in the S&P 500. And we can look at its profit margin. It's making a nice profit, 14.61%. And it has quite a high debt though of 78.95% and a debt to equity ratio of 176%. So it does have quite a lot of debt, but it is making a profit and it's generally considered quite a stable dividend payer. And the payout ratio for that dividend is at 53%. So it's quite a good payout ratio. That is Verizon. Up next, number 4 on this list is another very solid dividend payer, and that is AbbVie. So AbbVie, ticker symbol ABBV, is a very solid company in the S&P 500, paying out a dividend yield of 5.49%. And that's going to work out around about $1.18 per share. It's going ex-dividend on the 14th of October, paying out on the 16th of November. At its current price, it is considered undervalued by 43.5% according to analysts, and the PE ratio of 14.92 is actually fairly low as well. Looking at its 1 year graph, it has recovered quite a lot actually from the crash. It had a slight drop off as of late. The maximum graph here we can see it was growing and growing, and now it's kind of been fairly stable in the last few years. The payout ratio, whilst it's a very high dividend yield of 5.49, the payout ratio is 102%, so it's paying out more than it's earning at the moment, but it has a nice profit margin now of 23.69%. Very nice profit margin, but as you can see here, the debt on the other hand is 109%, so it's very high debt, and a debt to equity ratio of, wait for it, 593%. So it does have a lot of debt. Not all debt is bad. This is a big biopharmaceutical company, so they're going to take on quite a lot of debt. It is making a profit though, and it is paying out a nice dividend there of 5.49%. Up next on this list is a company I haven't spoken about before, and that is Bunzl, B-U-N-Z-L. So Bunzl, I think I'm saying it right, it's Epic code BNZL. It is a big outsourcing and international distribution company, and it's currently paying out a dividend yield of 2.06%. It's going ex-dividend on the 15th of October, paying out on the 16th of November. It's been doing very well this year. Obviously the crash happened and it's been growing up and up and up ever since. Now trading at around about £25 per share. And at this price, it is considered slightly undervalued according to analysts by 2.4%. It's got a PE ratio of 23.15, which is quite high compared to the industry of around about 18. But the future growth is considered to be 7.7% in the next 1 to 3 years. But better than that, the future return on equity, 19.2% in the next 1 to 3 years. They are making a very small profit there as well of 3.74%. It does have quite high debt though, 70.54% debt to assets and 106% debt to equity. So pretty high debt, but it is still paying this dividend, and it's going to be paying you around about 35.5 pence per share, and that's a payout ratio of 45%. The 6th company in this list is another one in the Ftse100, and that is BAE Systems. So BAE Systems, Epic code BA dot, that is in the Ftse100. It's currently paying a nice dividend yield of 4.39%. It's going to be going ex-dividend on the 22nd of October, paying out on the 30th of November. Now it currently trades at around about £4.90 per share. And looking at the maximum graph here, it has grown and grown over the years, and then it's been a little bit up and down. And this year we are quite far off those highs back in February, around about £6.67 per share. So it has dropped off quite a lot since then. Look at the 3 month, it's been a little bit up and down as well. However, it is still paying out a nice dividend, and the payout ratio for this 4.39% dividend is 61%. It's got a PE ratio of 12.17, which is considered quite low compared to the industries of 20.4. And at this current price, it is considered undervalued according to analysts by 28.7%. And just jumping into its profit here, it is making a profit 8.06%. But the debt to assets is once again slightly higher, 78.90%. And the debt to equity is over 100%, 101.7%. But nevertheless, it's still paying out a dividend, and it's got quite a low payout ratio of 61%. The future return on equity for BAE Systems in the next 1 to 3 years is considered to be 26.9%. The 7th company today is Colgate. So now looking at Colgate, it is a massive company in the S&P 500. I think we all have a Colgate product in our house, probably toothpaste of some sort. It is a ticker symbol CL. It's got a dividend yield of 2.32%. It's going ex-dividend on the 22nd of October, paying out on the 16th of November. It's going to be paying out roughly 44 cents per share. We look at the 1 year graph, it has recovered quite nicely, and it's now at $76 per share. And the maximum, whilst it's quite up and down, this is a dividend paying stock, it is not far off of those all-time highs. We can see the PE is currently at 26.09, which is fairly in line with the industry, and the valuation according to analysts is also kind of in line, maybe slightly under, 2% undervalued. It's making a nice profit as well, 15.08% profit. However, the debt is very high there, 99.22% debt to assets. So it does have a huge amount of debt. However, the dividend is still paying out, 58% payout ratio. This is a company that's been around for a long time and going to be getting you 44 cents per share. So the last company on my list today is ticker symbol HAS, that's Hasbro. So Hasbro, ticker symbol HAS, it is in the S&P 500, and it is a massive entertainment gaming company. It's paying out a dividend yield of 3.57%, and that is going ex-dividend on the 30th of October, paying out on the 16th of November. It's had a very tough year. Like most companies, it's currently down 31.6%. But if we look at its maximum graph over the years, it was doing pretty good. And at its current price, it is considered undervalued by 8.5%. There has a future growth in the next 1 to 3 years of 28.9% in the earnings and revenue, and a future return on equity of 31.5%. So a lot of growth is predicted for this company. If we look at its financials here, it is making a nice little profit there, 11.03% at the moment, and the debt to assets is quite high, but it's not as high as some of these we've seen today, 66.17%. However, the debt to equity is 194%, so it's quite a higher debt. But that dividend is still being paid out, albeit at a very high payout ratio of 96%. But I've included this company because it is a dividend payer, and I know a lot of people that do hold this company. So that was the last one on this list, Hasbro.
So there we are, that's the 8 companies there in this video going ex-dividend in the month of October. I try to get these videos out at the end of every month, so if you do want to keep up to date with some of these ex-dividend dates, be sure to hit the like and subscribe to my channel. And if you can let me know in the comments below, do you hold any of these companies? Maybe you're going to plan on buying some more. Let me know down below. Thanks for watching, and until next time.